There are 366 ETFs currently listed on the Australian Stock Exchange. I've scanned through every single one of them to give you the top 8 highest paying dividend ETFs for 2025. The Vanguards, VanEck, BetaShares, and iShares, I looked at them all. With over $200 billion invested, ETFs are a powerhouse. But how many investors are in poor performing funds? Are you one of them? I've done the hard yards and spent literally hours scanning the internet to find the top dividend ETFs so you don't have to. So stick around as there are some big dividend ETFs currently overlooked by investors. Hey guys, my name is Brent and I previously worked in a billionaire's family office, investing in the public and private markets. On this channel, I help Aussies grow their wealth by sharing investing tips. Make sure to subscribe to see more Aussie investing content. So here we have a spreadsheet with all 366 ETFs offered on the ASX. There are lots of great investing opportunities here, but today we're focused on the top paying dividend ETFs. Let me run you through the data. On the left-hand side, we have the category. This is how we can differentiate the investment theme of each fund. Jumping over to the next tab, we can see that roughly half of the equity ETFs invest outside Australia, while around 20% of the funds focus on Australia. What we'll see in this video is whether Aussie or global equity ETFs perform best when it comes to paying dividends. Jumping back, we can see the fund issuers like VanEck, the fund names, and a bunch of numbers. The first number shows the annual fees as a percent. Next along, we have the funds under management, expressed in millions, and we can see the one-year dividend yields and historical overall ETF returns. This data is straight out of the ASX, and due to time delays, was accurate as at the end of November. Let's now cut this list down. First, let's cut the smaller funds. They're not favored by the market and tend to have lower liquidity. Second, we'll trim the newer funds. I want to invest in dividend ETFs that have been around for a while, so I'll eliminate any which don't have data out to 5 years. Third, and controversially, I eliminate any funds that have underperformed the benchmark Australian index. Not everyone would take this step, but hear me out. First, as dividend investors, wealth preservation is a top goal. Otherwise, if our tax dividend return is eroded by untaxed capital losses, we are likely to be worse off as compared to just keeping our money at the bank. Second, as the price of an ETF falls, the dividend yield rises, which would skew our findings here. So for me, I like to eliminate the stragglers and only keep the winners, gaining from both capital appreciation and a dividend payout in tandem. So as you can see at the top, the ASX 200 rose an annualized 8.28% over the past 5 years. So in the filter, I'll rewrite our formula from earlier with our new figure. So now, scanning through the remaining options, I personally only want to look at diversified funds as we don't know what sectors will outperform in 2025. So here I'll remove the sector and geography specific categories. And there we have it, the 54 top paying Australian dividend ETFs. Some of these funds had abnormal payouts in 2024, so once I filter those out, this is what I get. Let's dive into each of them. Starting with the BetaShares Australia Top 20 Equity Yield Maximizer Fund, ticker YMAX. With a 6.92% dividend yield, this ETF tops our list for 2025. It invests in the 20 largest blue chip stocks listed on the ASX, with a large weighting towards the big banking and resource giants like CBA and BHP. The fund uses a covered call strategy by selling call options. This generates additional income to distribute, offsetting potential losses in the case of a market decline. The fund pays dividends quarterly, has a 0.76% annual management fee, which is on the higher end of things, and has over $500 million under management. It has a franking level of 46.9%, and its distributions have been regular over recent years. Second up, we have the Vanguard Australian Shares High Yield ETF, ticker VHY. Boasting a 5.2% dividend yield, this fund narrows down stocks that are forecasted to pay above average dividends on the ASX. Industry concentration in the fund is capped at 40%, and any one company at just 10%. Just like our first ETF, but without selling the call options, there is a large weighting towards Australian banking and resource stocks. The fund pays dividends quarterly, has a 0.25% annual management fee and has over $4.3 billion invested. According to InvestSmart, it has a relatively low franking level of 32.7% last year, and its distributions have been regular over recent years. Third up, we have another Vanguard fund, the Global Value Equity Active ETF, ticker ZYAU. It offers investors a dividend yield of 4.62% by investing in global equities that show value characteristics. Fortunately for us, fundamental measures of value like price to operating cash flow are often great for dividend payouts. Tobacco giants like Altria and British American, along with telecom stalwarts like AT&T and Verizon, are all high cash generative businesses with above-market dividend yields. The fund pays dividends quarterly. It charges an annual management fee of 0.28%, and it has $700 million under management. As the fund largely invests abroad, it has a low franking level of just 0.2%, but has a strong history of paying regular dividends. In fourth, we have another BetaShares fund, the FTSE RAFI Australia 200 ETF, ticker QOZ. We have a return to Australian stocks here, with this fund paying a dividend yield of 4.44%. The fund invests in the top 200 companies listed on the ASX. However, unlike the accumulation index, it sells down expensive shares and buys more undervalued ones. This changes the weighting slightly, but ultimately, when we look at the portfolio composition, it's a similar mix of larger listed companies. The fund pays dividends semi-annually, twice a year in Jan and July, charges a management fee of 0.4%, and currently has $600 million invested. It has a healthy franking level of 65.7%, and dividends have been regular. However, they have been down in 2024. So to maintain such a great yield shows the strength of this dividend ETF. Now we move along into our fifth position, where we have the iShares ASX 20 ETF, ticker ILC. The fund offers investors a dividend yield of 4.38% and invests in Australia's largest 20 listed companies on the ASX. If you remember, our first fund did this too. However, this fund does not have a covered call strategy, so its yield is therefore lower. It goes without saying that Australia's 20 largest companies are extremely cash generative and therefore pay high dividends. The banks make money hand over fist, joined by the telcos, the supermarkets, the insurers, and the mining giants. There is rarely a year where they don't make money to share with their owners or the shareholders like us. Now, the fund pays its dividends quarterly. It charges an annual management fee of 0.24%, and currently it has $670 million under management. If we look back to last year, the fund had a franking level of 68.3%, and dividends have been regular over many years. Sixth up, we have another BetaShares fund, the S&P 500 Yield Maximizer Fund, ticker UMAX. The fund pays a dividend yield of 4.27% and invests in America's 500 largest companies. Remembering back to our first fund with the ticker YMAX, this fund has the ticker UMAX and implements a similar covered call strategy. American companies tend to pay lower dividends as compared to Australia, which explains why much of this list invests at home. So BetaShares have a good strategy across these two funds to elevate returns while investing in blue chip stocks in both markets. The fund pays dividends quarterly, charges an annual management fee of 0.79%, on the higher end again, and currently has $260 million under management. The fund has paid regular dividends over the years and does not offer franking credits. In seventh, we have the Morningstar International Shares Active ETF, ticker MSTR. It shares a ticker with a very popular stock over in America called MicroStrategy, which invests in Bitcoin, holding over 2% of the current issue. That one is listed over in America, this one is listed in Australia. So don't get them confused. The fund pays a dividend yield of 4.17% and invests in high quality and well-valued global stocks. Unlike most similar funds that invest predominantly in the United States, this fund sends 43% of its funds to the likes of China, Finland, Malaysia, and Japan, seeking good investments. The fund pays dividends annually, charges an annual management fee of 0.39%, and it has $270 million invested. The dividends have also been regular over the years. And finally, in eighth, we have the State Street Australia Select High Dividend Yield Fund, ticker SYI. This fund offers investors a dividend yield of 3.58%, and it invests in Australian companies with relatively high dividend yields and franking credits. The fund targets companies with recurring dividends, avoids dividend traps, and looks to capture capital gains on the side as well. The top holdings are very similar to other Australia-focused funds, however it looks like they have a greater focus on financial, telco, and energy stocks. The fund pays dividends quarterly, charges an annual management fee of 0.2%, and it has over $400 million under management. It also offers the highest franking credits of 81.9%, and dividends have been paid regularly. If you enjoyed this video, please make sure to subscribe to my channel down below and hit the bell to not miss any of my future uploads. Also make sure to check out some of my other dividend videos which should be appearing somewhere over here. Thanks for watching, and I look forward to catching you on the next one. Cheers.